Hey everyone, me Kevin here. Holy smokes, so what is going on with Bitcoin? What is double spend? What should we do going forward? Is it time to sell? Is it time to buy? What is Ark Invest doing? What is going on with the Grayscale Bitcoin Trust? Is it floundering? And oh my gosh, there's so much to unpackage. The easiest way to do this is just relax, take a deep breath, and walk through it all together because we've got the answers in this video, or as many answers that I can put together. All right, first, let's start with the most important issue right now, because Google search trends for this are skyrocketing. We have to understand double spend, because double spend is potentially really bad. Double spend is where a fraction of Bitcoin is used twice in two different transactions. That means people can literally buy goods and services twice, or two different people could use the same coin to buy two different goods and services, and then one of those disappears as it gets fixed. So somebody ends up getting left screwed out of money. The easiest way to think about this in real life is, let's say these were, I don't know, $100 headphones because they're broken. You know what, let's call them $20 headphones because they're broken. And two people walked into a store. One person walked in first, bought these broken headphones for $20. And then a second person walked in using a magic replica of that same $20. But also some $20 broken headphones came out with them. Now both people have the $20 broken headphones. The merchant's like, cool, I got two $20 bills, puts it in the till, closes the till, and then all of a sudden, poof, one of the $20 disappears. AKA the merchant just got screwed out of $20. That's kind of how you can think about double spend. They get double products, merchant gets screwed. It's a great way to defraud Bitcoin. And if this actually happened, like if Bitcoin double spend was a real problem, Bitcoin would probably collapse, like literally calamitously implode. It could potentially go down to as close as zero, some Wall Street experts say, because it would lose all of the underlying trust that Bitcoin has, that this is just a permanent blockchain record, which is actually redundant. I'll explain that. And that double spend can't happen. And if it does, it gets corrected. Okay, so here's what we got to know about blockchain quickly, and then double spend is going to make a whole much more sense. So the whole point about the blockchain is a permanent record chain. When you hear block, think permanent record. When you hear chain, think, well, chain or just a bunch of spreadsheets put together. That's your blockchain. And keep in mind, there is no regulatory body or oversight body for Bitcoin. So if there's an issue or fraud going on, it's a problem because you've got decentralized companies and businesses and people verifying transactions. And you actually have a ton of duplication of transactions. And so what happens is you have a bunch of different nodes or miners verifying transactions. They all get these fancy things called hash keys. And as long as everybody gets the same result, that block is considered verified. Boom, you move on. And I'm really oversimplifying here. I know it's way more detailed than this, and I'm just scratching the surface. But the point is, if there was a double spend instance that came up, technically that person would have an unmatched hash, it's called, and they would have their verification get rejected. And so that is a way, by having all these different verifications going on, that Bitcoin kind of prevents double spend from happening. And if double spend happened, that means the verification system failed, and it would be deadly for Bitcoin. It would be very, very, very bad for Bitcoin. Fortunately, though, this is where the news comes in. This whole double spend talk that happened today had to do with a $21 transaction that ended up being declared a payment processor issue, not an issue of double spend, that the verification process actually worked, properly rejected the double spend, and no, there was no actual Bitcoin double spend. This basically means that Bitcoin's system worked. It prevented a potential double spend scenario. And now we know that Bitcoin is, and this happens regularly, transactions regularly get disputed, but it was just this rumor gets squashed by the truth that no, there was no double spend, Bitcoin's good. This underlying security of Bitcoin remained stable. Good, we like that. That reiterates that Bitcoin's technology works. But why then, if that's, the bad news that was reported, and this is the good news, why is Bitcoin selling off then? All right, so let's talk about why it's selling off, what we should do about it, Ark and Grayscale and all that. So I want to quickly say on December 30th, I made a video talking about a coming Bitcoin crash. And I got so much hate and people unsubscribing on that video because I simply suggested, hey, I'm looking at this right here and I think there's a chance Bitcoin could fall because of this, that I had people unsubscribing left and right because they're like, oh my gosh, you're just hating on Bitcoin. I'm like, no, like it was just supposed to be like a fair heads up. But anyway, now that it's fallen 25% in the last week and a half here, let's understand what the heck is going on. Why is Bitcoin falling? What are the different reasons why Bitcoin is falling? There are 3 big ones that we're going to address. And what should we do about it? Let's get into that right now. First, Janet Yellen, inflation and regulation. Janet Yellen, whose entire 3.5-hour Senate confirmation hearing earlier this week, I broke down in a nice 30-minute segment with the most important highlights, including information on cryptocurrency, which you should definitely watch. You want to subscribe for this kind of content. Anyway, use that little RuneScape button. It's at one of these corners so that you can subscribe. But anyway, Janet Yellen, she had a lot of things to say. She spent a lot of time talking about stimulus relief, inflation, COVID, and she touched on cryptocurrencies as well. And this is very important because when Janet Yellen, the next Treasury Secretary, strongly believes that inflation is going to stay low, echoing the opinions of Jerome Powell, then this really starts going counter to what a lot of people who invest in Bitcoin believe. And now we know that there's a real big difference between what we think of as real inflation as Bitcoin investors and what the government calls inflation. But the fact that Janet Yellen is coming out and reiterating very confidently that inflation could stay low, it definitely makes people wonder like, oh, this isn't good. And you begin to question the investments into Bitcoin protecting or inflation protecting assets like Bitcoin. See, Cathie Wood, for example, also over at Ark, thinks that there's a very good chance we're going to see some big inflation coming and that the Fed's going to be wrong and that they're going to have to reverse course. And that's why investing in Bitcoin could be a good hedge. Personally, I believe that if the velocity of money that we're seeing stays low, in theory, we can keep printing money for the time being and not have inflation, which again, sounds ridiculous. However, if velocity of money goes up, and you could track that, just type in M2 money velocity into Google, and you can find this. But anyway, if money velocity goes up, oh yeah, we're gonna have bad inflation, and Bitcoin's going to the moon as a hedge. But right now, people are like, okay, so what is it? Is it inflation? Is it not? And Janet Yellen's like harsh rhetoric about inflation not coming could have potentially helped spawn this big sell-off that we have. And again, people measure inflation in different ways, but she's going to have a powerful voice as the Treasury Secretary, her as the representation of the U.S. government, and then the Federal Reserve, which is technically not the government, it's supposed to be independent. But both of them saying no inflation, it makes people potentially question, okay, maybe we're not actually going to see inflation. Or they're just lying to our faces so they can buy Bitcoin cheaply. Who knows? But she also touched on the need to regulate cryptocurrency, which honestly, that could have hurt as well. So Janet Yellen hitting on both of these things could have potentially had an impact. In fact, just to evidence to you that this topic about Janet Yellen is actually so important, look at what Cathie Wood tweeted today. She said, as the chair of the Federal Reserve from 2014 to 2018, Janet Yellen was on policy watch as Bitcoin soared from $1,000 to $20,000 in 2017. The fact that this week she focused on the risk of potential nefarious actors instead of the risks to U.S. monetary sovereignty is reassuring. AKA, Cathie Wood saying, hey, look, Janet Yellen doesn't think like the dollar's power is going to get replaced by Bitcoin, which there are some people who think Bitcoin could be a currency that replaces the dollar. I don't think that's ever going to happen. It's possible that stable coins that are pegged to the dollar replace the dollar, but the dollar's not going to go anywhere. It takes a lot of power away from the Federal Reserve and the Treasury Department. And so that's not going to happen. And so Cathie Wood here is saying, hey, look, it's good that she's not thinking that Bitcoin's going to do that, because then Cathie Wood would be saying, hey, Yellen, you're totally misunderstanding what's going on here. That's not what she's saying, which is good. Instead, she's talking about, hey, maybe we do need to watch Bitcoin for potentially, for potential crime. Then one of the analysts over at Ark who handles cryptocurrencies, he said, interesting that Treasury Secretary Janet Yellen, to be confirmed, has stated concerns that cryptocurrencies are being used mainly for illicit financing on the same day that Chain Analysis reported a dramatic fall in cryptocurrency transactions associated with criminal activity. Ah, interesting. So decline in criminal activity, total illicit. Interesting. I wish he put can we see this? He doesn't have the date scale up. I would have liked to see the date scale. Maybe if you go to this tweet, you might be able to expand it and see it if you want to learn more about that. But that's his conclusion. Also, as Ark noted in the past, cash transactions account for a larger share of illicit transaction activity than cryptocurrencies do. Yeah, you could definitely expand these if you go to his profile. I'd be more concerned if Yellen denounced Bitcoin as a threat to monetary sovereignty. Kind of, again, this is what Cathie Wood reiterated, absolutely. And as a neutral technology, Bitcoin cannot identify criminals. This does not make it inherently or an inherently criminal tool. Phones, cars, and the internet are no less bannable for facilitating criminal activity than Bitcoin is. So clearly, Ark Invest is like, do not mess with our Bitcoin, okay? Bitcoin, moon, we are on the rocket ship. Do not talk bad about our Bitcoin. We will come after you. And you know what? Look, you might be like, hell yeah, Ark, go for it. But I have to tell you, how smart is Ark Invest? That is how they get all, I mean, obviously performance helps as well, but that's how they reiterate the people's love for them. Very, very smart. I have to say, just absolutely smart. So then now this brings up the next issue, right? Because that's not the only reason Bitcoin prices were shaky today or have been shaky here. It's not only because of Janet Yellen, it's also because Bitcoin has recently failed some technical tests on charts. Wall Street traders believe that if Bitcoin could hold over $40,000, it would have the potential to go over $50,000 and break through. However, Bitcoin failed that 40K test. It only briefly went up to 41,940, but it couldn't hold up. It didn't get support, and it ended up selling off. It hit some big resistance there and fell straight down. So it's been very volatile since then, and now we're down about $10,000 since that high. Now, in fairness, Bitcoin did double in under a month from 20,000 to 40,000, so 25% is not a surprise to have some kind of correction or pullback here. But some traders warn that this pullback could end up leaving Bitcoin retracing all the way down to 20,000 again. Now, Wall Street right now seems to be settling at the 40K target as this maintenance threshold for Bitcoin, but who knows if that ends up getting adjusted over to 30K or wherever we end up finding some sort of support for Bitcoin. Now, the third problem with Bitcoin right now as to why we might be seeing a sell-off, and this is what I talked about in my prior video on December 30th when I suggested, just be careful, this could be a catalyst for a Bitcoin crash, and this remains true. This could continue to be a catalyst. So I'm going to bring it up again, and this is not me saying I want Bitcoin to crash. I do not want Bitcoin to crash. I'll be very, very clear about that. This is just me pointing out, like, this could be a catalyst for a problem. So just know this, so that way when it happens, you don't have to panic sell, and you could just use it as a buying opportunity. That's the way I would look at it. But anyway, if you're not familiar with this yet, this is something I've already talked to all my course members about. We even set some dates for when we might want to sell Bitcoin if we were going to sell Bitcoin. It's not anytime soon, but we did set that on the calendar. These are the things we talk about in the daily live streams when the topic comes up, especially after I found something interesting. The course members are always the first to hear about it. Link down below. You could use that coupon code as well. Remember that coupon code is, there you go. It gets you 38% off, which is pretty valuable. But anyway, okay, I know Bitcoin investors don't like hearing about CPI, but realize this is going to be very important. Right now, this is the chart of the consumer price index. This is what the consumer price index has done and how it's sort of behaved here, right? Here, let's clean up a little bit. There we go. So what's going to happen is, in April, we're going to report year-over-year inflation data. Well, in April, we're going to be at a CPI level of not about 262, but we're probably going to be sitting somewhere around 265 in terms of CPI. And again, even if you hate CPI, just listen to this. It's important. So if we're sitting at 265 in March and April, let's say, let's call that March, for example. Okay, so March is 265. The way they're going to calculate CPI is they're going to go over here and say, what was March of last year? And we can follow that line over and see that we were right around 256. So all you have to do is do 265, which is to, potentially March's CPI, if we go there, which is likely. Divide that by 256. And when you do that math, 265 divided by 256, you'll get 1.035. Take off 1% or 100, right? You end up with 3.5% inflation year over year. That means this bump right here, like that bump we're going to see, is going to be 3.5% inflation year over year. It's not going to be month to month. And that's going to stay. That's going to be there in March year over year. And it might even go up to like 3.7% in April. So yeah, when that happens, my expectation is there's a chance Bitcoin could skyrocket. But when people realize, wait a minute, the only reason CPI actually looks that high is because we had this, sort of pandemic trough here, then we might not actually see those higher inflation readings, because the year-over-year inflation reading isn't actually what we should be comparing to, because, realistically, if this trend line continued here, we'd probably be more at like 260 CPI if we didn't have that dip. And so in that case, if we divided 265 by 260, we'd be at like 1.8, 1.9% inflation, which would be kind of relatively normal and expected. So, yeah, I mean, obviously, rough calculation here with the 1.9, but the other thing, it's true. It's gonna happen. It's gonna happen. So be aware that that could be a catalyst, and I think that could also be leading to some tumult in Bitcoin right now, as maybe hedge funds start realizing, crap, do we take profits now because the CPI data is not going to stay high that long? Remember, hedge funds are always trying to look out ahead. They're trying to beat us to this kind of data. So anyway, that's just an opinion that I have. That does not mean that I'm anti-Bitcoin. I like Bitcoin. And I want to make this very clear too. Bitcoin is very volatile, right? And I believe that Bitcoin is very volatile because when you have hedge funds sell, we don't necessarily have the buying support to buy everything that was sold that day. And so what happens? Well, if you have more sellers than you have buyers, the price goes down. But I want to be very clear with my position on Bitcoin. I believe that Bitcoin is extremely volatile. When big institutions sell, not enough buyers to pick it up, prices go down fast. This is normal. Then that leads to more institutions selling, because that's sometimes what they do. And boom, you get a sell-off. But the beauty here is what we learned today about this double spend actually proves that the blockchain works. If the blockchain didn't work, Bitcoin would probably go to zero. It would be very bad. But because the blockchain reiterated to us that Bitcoin works, the blockchain works, we should actually be more bullish on Bitcoin. We should be more bullish on Bitcoin today. And again, I said that Bitcoin is volatile, but it's so important to remember that volatility does not equal speculative. Speculative is going to the casino going, I got a hunch this one's going to be black, baby. We're going black. This one, we're going to hit it on black. Black 35. Let's go. I don't even know if 35 is black, but y'all get what I'm saying. In my opinion, Bitcoin is volatile, but it is not speculative. It is something that is here to stay. And blockchain technology continues to reiterate that blockchain technology and cryptocurrencies are here to stay. The safest are the ones that get used the most because you have more verifications. And certainly the way the systems work, a lot of them have different verification systems and they work in different ways. I'm not that familiar with the other systems. Right now I'm focusing on Bitcoin. So what are the three things we can do? Well, number one, we can panic sell, which I don't recommend doing. Number two, we can hold and understand that this is volatile and not speculative, and there's nothing fundamentally different about Bitcoin between today and 3 weeks ago or 2 weeks ago. Number three, you can actually consider buying the Grayscale Bitcoin Trust. See, the Grayscale Bitcoin Trust is basically like buying a stock of a company that holds Bitcoin. And I know I'm super oversimplifying here, but a lot of exchange-traded funds use the Grayscale Bitcoin Trust because they can't invest in Bitcoin in an ETF. So when you invest in, for example, Ark the Ark Invest Next Generation ETF, they use the Grayscale Bitcoin Trust to buy Bitcoin. Now you pay a premium to buy Bitcoin through this. But interestingly, because of the recent sell-off, the Bitcoin premium in the Grayscale Trust, so what you're actually paying above the actual value of the Bitcoin they're holding, has recently plummeted. Right now, you are paying about a 6.2% premium on Bitcoin purchases through the Grayscale Trust. That's really, really low. Just here around Christmas time, you were paying about a 40% premium to buy Bitcoin through the Grayscale Trust. So here's a takeaway. Look, this fall, this dip of premium to under 7% has happened about 14 times since 2015. In 11 cases, out of those 14, the average 5-day return was 8.8%. And the average return over the next 30 days was 29%. Because the average return, like premium at the Grayscale Bitcoin Trust is usually 30%. So you tend to get that sort of mean reversion, and that could be an opportunity to buy the Grayscale Bitcoin Trust cheap right now, relatively cheap. Now again, if you buy it, you're putting money into Bitcoin, right? So you still have the Bitcoin volatility to consider, but the premium you're paying is much lower right now than it has been. So there you go. If you found this kind of video helpful and these sorts of facts and not speculation, this sort of insight, consider subscribing to the channel. I really appreciate all of the support, and make sure you share these sorts of videos if you personally learned something. I know there are many other people who will learn from this as well, and I'd love to share information like this whenever I can. I know that YouTube does not send all notifications, so your help in sharing is always greatly appreciated. Thank you so very much for your support, and folks, we'll see you in the next video.